somebody. This is for me now.
Right. Bismillahir Rahmanir Rahim. The last session before the lunch is on Takaful Prospects in the GCC. And we have a very distinguished panel to discuss the matters related with Takaful Prospects in the GCC. This session would be moderated by Suhail Jaffer, who is managing partner with FWU Global Takaful Solutions. He's based in Dubai, but the company has offices in Europe as well. Other members of the panel are, and if I request the panelists to be seated, if you could kindly sit, that will be. If you could kindly sit, that will be. Ajmal Bhatti, he is the president and CEO of Tokyo Marine Takaful, UAE. Dr. Ashraf Wajdi Dusuki, he is head of research affairs at International Sharia Research Academy in Malaysia. Safdar Jaffer, he is managing director and consulting actuary Middle East and Africa with Millennium UAE. There is a replacement for Stuart Crocker, who is global head of private banking group at Adib, Abu Dhabi Islamic Bank. He is being replaced with Datuk Noripa Kamso, the CEO of CIMB, Principal Islamic Asset Management in Malaysia. And we have Abid Shakil, who is associated with Ernst & Young, Bahrain, and he is these days based in Oman to advise on one bank, which is being in the process of formation to be the first fully fledged Islamic bank in the country. So with this, I would like to hand over the panel to Suhail Jaffer, who is the moderator for this session. I saw him here somewhere. So let's wait for Suhail Jaffer and Datuk Noripa. They would be with us, but in the meantime, let me say a few words on Takaful Prospects globally. And of course, the panel would be focusing on the Takaful Prospects in the GCC. Now, Islamic banking and finance started, or Islamic banking started officially in 1975 with the establishment of Dubai Islamic Bank. Takaful business started with a lag of about 7-8 years. Okay. And since then, I would say that as compared to Islamic banking, the growth in Takaful business has not been as good as Islamic banking. While the total size of the global Islamic financial services industry has exceeded 1 trillion, of which a very significant proportion of assets are actually held by Islamic banks, the Takaful business has yet to become a recognizable force in a number of countries. No doubt that Takaful has grown, and it has become a recognizable activity in a few countries, especially the countries like Malaysia. Saudi Arabia is another hub of Takaful business, and of course the neighboring United Arab Emirates. A lot of Takaful business is going on or being developed with the passage of time. One of the reasons that Takaful business in the distant past could not grow as much as Islamic banking was that there was not awareness of insurance business itself. A number of developing countries where Islamic banking and finance is now a recognized activity, insurance was very, very limited. Insurance coverage was limited in those countries. Since 1991 or the early 90s, however, with the liberalization of financial sector, there is now a growing demand for insurance products, and with this, the demand for Takaful products is increasing as well. Rizwan, if you could kindly ask Suhail Jaffer to come in, that will be really helpful. So, so with the liberalization of financial sector and availability of financial services to a wider segment of the markets, the demand for insurance product has increased. And as I said, the countries or the markets where insurance is a significant activity, Takaful is a significant activity as well. The countries there are some countries where Takaful was attempted, but it has not been as successful as it was expected for a number of reasons. In other countries, Takaful has actually become very, very significant, and the distinguished panelists, okay, they would shed the light upon the hotspots from Takaful viewpoint, especially with reference to GCC. But given that we have representation on the panel from Malaysia as well, so we would like to see what kind of developments are taking place in Malaysia with respect to Takaful. Takaful, the number of models, in the initial model of Takaful was based on Mudaraba, and the panelists would go into technical details on the Mudaraba model of Takaful. It then evolved into Wakala-based Takaful model. Bahrain was probably the first country where Mudaraba was combined with Wakala to come up with a hybrid model of Takaful. There is now a newly emerging model of Takaful which is based on Waqf or trust. And many analysts believe that the future growth of Takaful business would be aided by the Waqf-based Takaful business. Takaful is primarily a cooperative arrangement. It's a cooperative or mutual form of insurance. And the way in many countries Takaful is being practiced, this is in a public limit or private limited company context. And there is a need, at least some of the analysts, okay, they believe that there is a need that this model should be further developed to bring the elements of mutuality in Takaful business. These issues and some other issues, okay, they would be discussed by the panel today before lunch. Now we have got the moderator of this present session, Mr. Suhail Jaffer, Managing Partner of FWU Global Takaful Solutions, and I request him to come over and take charge of this panel discussion. I would request the panel if you could kindly finish the discussion by 1 p.m. That would be the lunchtime, and we would not like to go beyond 1 because we haven't had the coffee break, and the participants over here, they have been sitting here since 9 a.m.
Bismillahirrahmanirrahim. Assalamu alaikum. Good morning, ladies and gentlemen. I'm very pleased to be back in Oman. I remember my journey to Oman. Well, I used to come when I was with Citibank in the 1990s, but then I came for Islamic banking and finance in 2001, and I was 10 years too early. And mashallah, now I'm back again in 2011, and I think with the changes that have taken place in Oman, which are historic, I think we should have a very bright future going into the year 2012, mashallah. I realize we're under time constraints. All I would like to say is that Takaful, I think we will have a definition of it given by one of our panelists to explain what is Takaful, what are the prevalent models, and then thereafter, 5 minutes from there, we will have Mr. Abid Shakil, who's a partner for Ernst & Young. And Ernst & Young actually have produced many interesting reports every year. One is on Takaful, one is on Sharia-compliant investments, and the latest one which they produce, which I think they should be congratulated on, is the one on Islamic banking. So that I think you should probably get from Abid Shakil or his team here. After Abid Shakil, it'll be Mr. Safdar Jaffer, who is from Milliman, an international firm of actuaries. Safdar and I have known one another for quite some time, and Safdar has both knowledge on the GCC market. In the GCC, the two biggest markets at the moment for Takaful, as you are well probably informed, is Saudi Arabia and UAE market, United Arab Emirates. And after that, there are other markets, but these are the two biggest markets in the GCC as we are talking about Takaful in the GCC. The other person then who will talk about is Mr. Ajmal Bhatti, with whom I have great respect. He's one of the pioneers of Takaful, and he will give a point of view of how global insurance brands are starting to get involved in Takaful, and global reinsurance brands like Munich Re, like Swiss Re, like Hanover Re have become involved in Re-Takaful and what is Re-Takaful. I think given the time constraints we have, it is 12:15. We are supposed to finish at 1 o'clock for lunch. So we have 45 minutes and we have 1, 2, 3, 4. So I think if we speak for about 5 to 6 minutes each person, and then we open up for question and answer session and questions from the floor. So without further ado, I will hand over to yourself.
Bismillah ar-Rahman ar-Rahim. Alhamdulillah, salatu wassalam ala Rasulillah wa ala alihi wa sahbihi ajma'in. Amma ba'd. Assalamu alaikum wa rahmatullahi wa barakatuh. And a very good afternoon to everyone. Thank you, Suhair. Let me introduce myself. My name is Ashraf Wajidi Dusuki. I'm representing International Sharia Research Academy for Islamic Finance, ISRA, which was established by Malaysian government under the patronage of Central Bank. Basically, when we talk about takaful, we have been dealing with the issue of banking since yesterday. And sometimes we tend to forget another sector which is equally important to ensure the Islamicity of the whole financial system is the element of takaful. And as mentioned in the Quran, udkhulu fis silmi kafa. If you want to enter into Islam, you have to take it entirely. So that is one fundamental aspect. We have to ensure Islamic finance is from A to Z. I don't want to get into debates of Sharia compliant or Sharia based. We have a lot of debates this morning. But when we talk about contracts in Islam, generally it can be divided into two categories. One is contracts pertaining to profit making, which is uqud mu'awadat, and another one is contract pertaining to charity, uqud tabarru'at. And when we talk about takaful, it is actually under the categories of uqud tabarru'at, whereby one of the famous legal maxims in Islam, يغتفر في التبرعات من الغرر والجهالة. When it comes to tabarru' contracts, the issue of gharar, which is prohibited in Islam, especially gharar jasim or gharar fahish, which is excessive in nature, will be considered irrelevant in the sense that it will not lead to dispute. This is the foundation or the basic principle in structuring takaful in the very beginning. That's why in today's model, we can see two categories of takaful structure. When I say two categories, within this takaful structure is basically when we want to structure a takaful product, we have to ensure that the first model is either to adopt wakala, mudarabah, or even a hybrid model which has been mentioned by Dr. Humayun earlier. But more importantly, the basic foundation of takaful is based on the concept of tabarru' or concept of charitable, whereby the issue of gharar and jahala, ignorance, will be exempted. But more importantly, when we look at the various model that is currently adopted in various jurisdictions, be it Far East like Malaysia, Middle East, and so on, basically the issue has been very much trying to come up with a model that can address a lot of constraint within the takaful industries, particularly when we tend to basically replicate the conventional insurance practice pertaining to surplus distribution and so on. And that's why, if you look at the takaful model today, what makes it different from conventional insurance? Basically, when we talk about conventional insurance, it is based on mu'awadat contracts, whereby when one participant pay premium in order to buy the policy, it's actually a contract of exchange, whereby one party pay consideration for a policy, which is based on certain principle of sales. And this is basically, when you structure it based on exchange contract, then the issue of gharar came into the picture. The issue of ignorance or jahalah came into the picture. And in Islam, when we deem or we look into the conventional insurance, the issue of gharar is pertinent in the sense that when one party actually pay premium for a certain subject matter, which is a policy, and this policy is something which is uncertain, whether it will happen, it may happen, or it may not happen. Therefore, it has a huge uncertainty which may invalidate the whole contract from the Islamic perspective. Not only that, the issue of riba also will exist in this conventional insurance, especially riba al-fadl. Because when you pay money with the expectation of getting something of a huge amount, of larger amount, this will not be of equivalent in value. And not only that, the issue of riba pertaining to how the conventional insurance investment processes takes place. These are all conventional way which is prohibited from the Islamic perspective. Alternatively, when we talk about Islamic takaful, there are quite a number of models applied in the Middle East. In Saudi, for example, it is based on ta'min ta'awuni, which is based on, even that also based on the principle of tabarru' or takaful in general. Because when participants contribute their money, it is actually a contribution in a pool to help each other. It is based on the principle under Islamic transaction, وَتَعَاوَنُوا عَلَى الْبِرِّ وَالتَّقْوَى وَلَا تَعَاوَنُوا عَلَى الْإِثْمِ وَالْعُدْوَانِ. You have to help each other in doing good things. And this is also very much related to the principle of what is known in the classical jurisprudence as tanahud or an-nihd. This is based on the hadith of the Prophet ﷺ, which I can quote to you. It is derived or narrated by Abi Musa al-Ash'ari. قال النبي صلى الله عليه وسلم إن الأشعريين إذا أرملوا في الغزو أو قل طعام عيالهم بالمدينة جمعوا ما كان عندهم في ثوب واحد ثم اقتسموا بينهم في إناء واحد بالسوية فهم مني وأنا منهم. The Prophet ﷺ one day mentioned to the companion that Al-Ash'ariyin, one tribe of Ash'ari, basically when they have problems in terms of deficit, in terms of food, in the war, in the battle, or they have a problem of deficit when they have a problem of deficit of food among their family. What they do, they will collect the food each other and they will put in one thawb, one piece of cloth. And by collecting all this food together, they will then contribute or delegate, share the food equally among each other. And the Prophet mentioned, فَهُمْ مِنِّي وَأَنَا مِنْهُمْ. And indeed, they are part of me and me part of them. And this is a basic principle which is currently adopted in Qatar, for example. In Qatar, they use the principle of sharikat ta'awuniyah, meaning that a partnership to come up with a principle of cooperation. And this is very fundamental because when it comes to surplus distribution, which has become a major issue in takaful operation today, this is the justification used by getting the surplus based on the principle of tanahud or an-nihd. So this is a general principle underlying takaful within this short span of time that I can elaborate in this forum. Wallahu a'lam.
Dr. Ashraf has actually very articulately explained the principles underlying takaful, the different models in a very brief snapshot. And I think there will be further questions, but at this point in time, I think he has actually set the scene of how takaful is different to conventional insurance. And now I will ask Abid Shakil on my left to give a business overview for the GCC, and you have the floor.
Thank you, Sahil. Assalamu alaikum, everybody. What I'd like to do is actually start off by just explaining the origins of takaful a little bit. And with that, actually, where has insurance then come from? So as we've just heard, the origins are really in mutual cooperation. And actually, until the 17th century, there was all mutual cooperation. There were no insurance companies, commercial insurance companies, as there are today. The concept of commercial insurance actually came about after the Great Fire of London. And it's only after that we've started to see commercial insurance companies come about where risk is actually transferred. Now, go back to my earlier comments this morning where the principles of Islamic finance, it's not just about the concept of riba and the prohibition of riba. There are many other aspects, and one of those aspects is risk sharing rather than risk transfer. Risk transfer is now what is prevalent in the conventional industry for banking and takaful specifically. What we've seen come about since the 1980s is a small takaful company being launched, the takaful industry growing. As of today, the takaful industry is sitting at just under $12 billion. That industry, by 2015, Ernst & Young have projected at growing and doubling to $25 billion. And that is because there are a number of factors involved there. One, within the GCC itself, every country is now looking at how it can increase its product range, increase penetration within customers, increase really the understanding of Takaful for consumers. And with that, I'm talking about just again and reflecting upon what is the true difference between Takaful, what is the true difference between conventional insurance. What we're starting to see also is an acceleration of migration of customers away from conventional insurance to Takaful. But what do the Takaful companies have to contend with? What are the greatest challenges for these Takaful companies? Well, actually, it's going back to the basic principles of commercial existence. A lot of these companies who are now trading and operating in one of the operating models or another, they are actually chasing market share. And in chasing market share, they are following the same principles as conventional insurance, effectively. They're not necessarily looking after the interests of the policyholders. The policyholders who are giving tabarru, who are making the donations, the money's going into one pot and effectively providing mutual assistance. The Takaful operators are still taking their profit and covering their expenses, but effectively there is little or nothing left for the policyholders themselves. That then goes back to the shareholders. The shareholders are then effectively funding their operations. You've got to then start to ask the question, well, is this sustainable? In the current format, you have to wonder how many of these companies will actually survive. So the concept of Takaful was there for mutual assistance, mutual support. What we see today in the GCC is the industry continues to grow, but the basic commercial aspects really need to be addressed as a matter of urgency. People need to, operators, shareholders need to understand what is it that they're actually giving, what service and products are they actually providing, and for what purpose. Now with that, I would then say, well, where are we in Oman? We are actually right at stage one, step one. We can learn from the mistakes that other nations and other operators have made, and certainly look at, well, what is it that needs to be done with the Takaful companies, and actually maybe the insurance industry as a whole here, to say we need to make sure that the interests of the policyholders, the interests of the shareholders are looked after to some extent. And with that, you then have to look at, well, how are companies building their models? What is their operating model? What is their business model? Is it all about profitability? Is it all about break even? How are you doing this? Are you chasing market share? Well, there needs to be a good understanding of the risk you are underwriting. The basic principles of what you see in an insurance company shouldn't be completely disregarded because you're now a Takaful company. So from that perspective, you need to make sure you're pricing your risk effectively and you're pricing it correctly. And so if there is an incident, then the incident is actually catered for, it's priced, and the risk is shared fairly by all people who are participating effectively as part of that Takaful company. These are just some of the key learnings and key comments we have, and as Suhail has very kindly mentioned, Ernst & Young do an annual World Takaful report. I'm more than happy to share that with anybody. We can provide soft copies. I don't have hard copies with me, but certainly if anybody would like a copy, let us know. These are some of the key aspects that need to be thought about, need to be given serious consideration, not only for operators that are coming into the market, but also for the regulator, as the regulator puts in place the framework to make sure that things are fair for the policyholders, they are protected, but at the same time, shareholders' interests are not completely disregarded either. Thank you, sir.
Howard, can you actually just make a very quick comment on the regulations for Takaful in the 3 jurisdictions, which is Saudi Arabia, UAE, who have just recently issued a set of rules, and Bahrain? To the best of my knowledge, those are the 3 countries who have some Takaful regulation. Just very quickly, but these regulations exist, and what can Oman learn from that, if, you know, in terms of going forward? Because there's no point trying to regulate Takaful with conventional insurance rules.
I completely agree. Let me start off with the biggest market, which is Saudi Arabia. Saudi Arabia has a Takaful market, but very much so, when you look at the regulations, they are much more in line with a mutual model. They call themselves Takaful, but it's very much so a mutual model. Now, there are aspects of that which there is healthy debate in the marketplace between scholars and regulators, which needs to be clarified. For Oman, I think it's a watching brief with what is happening over in Saudi Arabia per se. Bahrain as a market and as a regulator, there is much clearer definition. You're either a Takaful company or you're not. And I think when you look at it from that perspective, the clearer route for clarity is to certainly learn from what's happened in Bahrain. I'm not saying replicate. I would rather use the word emulate. There will always be things that can be learned from when the original regulation was written many, many years ago. So I would certainly say there are things that can be emulated in terms of what's happening in Bahrain. And the Malaysian model as well. The Malaysian model certainly set a benchmark for everybody to follow. And there are clear guidelines there for everybody to, again, whether you're an insurance company or whether you're a Takaful company, there are clear guidelines and clear boundaries for everybody to understand and everybody to follow. Of the three, for the regulator, I would say there's learning from all three markets. Even if the learning is don't do it this way or provide greater clarity, there is learning from all three markets. And I know the executive in the CMA have spent an awful lot of time and an awful lot of effort has gone into understanding the key aspects of each of those markets and many others as well. Certainly, they also looked at the FSA in the UK, where there was a Takaful company. So the regulators here in Oman have absolutely not made any rash decisions, and I wholeheartedly endorse that, because rash decisions do lead to confusion in the marketplace for the consumer.